Michael Burry has left people astonished again by selling his entire stock portfolio. Over the past few months, this great investor has been the talk of the town. We shouldn't be surprised because nobody knew what Burry saw before making that decision. But we're entirely sure it's all because of the current economy. Michael Burry just dropped a bombshell on one of the most shocking crises of all time, and now we have to believe that the world is about to wake up soon. Burry is not the type who's afraid to give out his opinions and ideas on the current economic state and proceedings. He does this often on his Twitter page. This current news by Burry hasn't had the optimistic feeling you would have thought about the economy. It is obvious that there has been a stock market crash over the past few months. In fact, this year hasn't been funny for investors far and near. Even at this point, Burry still believes we're not even in the thick of it yet. Deciding to sell his entire stock portfolio may not make much sense to you now, but as we progress, you will understand why. In this video, we're examining the major reason Michael Burry decided to sell his entire stock portfolio. So watch this video to the end because it will be interesting. Now, we've seen numerous tweets about Michael Burry, and we all know the story up to this point. More tweets of his have been more like a confirmation that he was right about inflation and how the market is destined to fall. He said everything happening has to do with the Fed's mismanagement. Indeed, it will get much worse than one could ever expect. Now, let's get straight to a seemingly exciting fact. Burry is an investor with over $100 million in assets, and one thing he does is file a 13F filing every quarter, which reveals the exact thing he's been doing with his portfolio. Now, his most recent 13F, filed a few months ago, has made many investors wonder what is really happening, and his latest 13F filing backs up his words. But wait, before we go ahead, is it evident that some do not know what this 13F filing means? Alright, if you're still wondering what it means, it's more like a filing made by big investors 45 days after the end of a quarter, and this filing reveals their stock portfolio at the end of that quarter. Several big names have this filing, like Warren Buffett, Charlie Munger, and Bill Ackman. Obviously, Michael Burry does the same, as he's the main reason for this video. Now that you've understood the basics, let's get into why exactly the great investor decided to sell his entire stock. In the second quarter, Michael Burry sold out virtually every position he held at the end of the first quarter. This was revealed by the 13F filing. At the end of the first quarter, Burry held 11 stocks, including big names like Google, Meta, Stellantis, Bristol-Myers Squibb, Warner Brothers, Discovery, Booking Holdings, and many others. His decision to do this is considerably relatable, and as we speak, these positions have been replaced with just a minimal new investment in Geo Group. You can imagine what it feels for Michael Burry to sell everything, but in reality, this perfectly fits with what he's been saying about the stock market and the economy over the past few months. Now, if he truly believes what he was saying about the economy, then selling his stocks and liquidating his investments isn't bad for him. This depicts that his actions go in line with what he said. However, the point now is, how will new investors see his recent decision? What does this mean for others who are taking after his investment strategies? Now, this brings us to whether other investors should sell or hold. We've seen a handful of investors claiming they were going to sell down their portfolios. Is this a good idea? We understand the feeling because many investors follow Burry's strategy and do what he does. However, you can't beat experience. Burry sees more. What he does may not work for another. This is why one needs to be very careful. We've seen headlines like Michael Burry is selling everything. Should you? Michael Burry dumps entire portfolio and buys a single stock. And many other headlines like this. This can only signify something, which is perhaps a fear factor in other investors. We understand why many new investors get caught up in fear and look to sell, but this may be one of the biggest mistakes. If you check through the filing, you also understand that Burry's case is entirely different from how you see it. Burry has proven that despite being value-minded, he doesn't really do long-term. He's not entirely focused on the long and even the medium. This means he focuses more on the short-term. If you're a long-term investment plan and decide to work as Burry, you may unknowingly hit yourself a nail in the toe. The only time 13Fs are valuable for investors is when you know the super investor in question is investing with a long-term mindset. If you're following the 13F, especially Michael Burry's, you'll realize the portfolio changes at different times. This means the information you get as a long-term investor could be a wrong signal. This is why we need to be careful before making decisions. One shouldn't be surprised if his reported portfolio changes completely in another 3 months. However, we hope things change for the better soon. With this, we won't be too worried about these things. Well, that's it for today, guys. If you enjoyed the video, do well to subscribe to our channel and give this video a like. Thanks for watching, and we'll see you in the next video.